Hello, everybody. Let me ask you a question. Have you heard that something crazy is happening in the stock market? Have you heard about the death cross? Could it be the end of the market as we know it? That's what we're going to talk about in this video. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro at trademaestro.com. I hope you guys are all doing fantastic. And I want to address a subject today that is in the media. It's out there. It's called the death cross. I'd like a really good sound effect for that, like the death cross. But I don't have one, so it's just me making one up. Anyway, the death cross. What is the death cross? Well, the death cross, so they say, is an indication that the end of the world is here, that the market's about to collapse, and it's going to be worse than it's ever been before. And every once in a while, we hear the media talking about the death cross, and it's like all hell's breaking loose, and they're like, what does this mean? They stir up all the fear, and people start freaking out, run for the hills. So today I thought we would take a look and learn what the death cross is and if it's really that scary and exactly what might be happening in the market. So let's get over here to my browser because I have pulled up for us. I did a little research for us, as if I didn't already know the answer. No, I did a little research for us. I want you to see the way Investopedia describes the death cross. The death cross is a technical chart pattern indicating the potential of a major sell-off. The death cross appears on a chart when a stock's short-term moving average crosses below its long-term moving average. Typically, the most common moving averages used in this pattern are the 50 and the 200-day moving average. Okay, that sounds scary, right? It's the death cross. So then let's scroll down a little bit here. Key takeaways. We're not going to read this whole thing, I promise. Key takeaways. Death cross, technical chart pattern, blah, blah, blah. Reliable predictor of some of the most severe bear markets in the past century, including 1929, 1938, 1974, and 2008. What are they doing, folks? They're trying to scare the bejeebers out of you and tell you that there's a death cross that's happening and the market's about to come to an end and you're going to go with it. That's what they're trying to do. So is it true? Well, it is true. There is a death cross. So let's come over here. And it's only happening on one chart. That's the other thing you need to know. It's only happening on one of these, and that is the NASDAQ. This is the NASDAQ. What I've put on this chart is two big old moving averages. In fact, just to help make it more clear, I'm going to make my big old moving averages a little bit bigger old. So there's one. I just made it a little bit fatter. So it's a bigger big old moving average. Oops, wrong one. Let's try this. There we go. And make it as fat as I can so you can see it, hopefully. The turquoise line, kind of the greenish turquoise line, this is the 50-period exponential moving average. And then the red line is the 200. These are the numbers that the media refers to when they talk about a death cross. So it is true. It is happening on the NASDAQ, and it occurred in the last week. So clearly, the end of the world is here, right? Well, let's go find out. All right, before we do that, let's just really fast, I'm going to hit the other indices. So this is the Dow Jones Industrial Average, and I just want to show you that there is no death cross on the Dow Jones. I want to show you on the S&P 500, there is no death cross. So the only one that it has occurred on is the NASDAQ. That's the first principle for you to pay attention to here. Second thing is, let's go see if this thing's really that scary. So the last time this happened was, oh, look at that. It's 2020. Oh, so clearly it works, right? Well, I don't know. Let's zoom in on this. Okay, so when the death cross occurred in 2020, it was right there. It was right there. That was the death cross. Wait a second. That's after we already hit a bottom on the NASDAQ of 6,800 and we bounced, and it happened when we were on the way back up at 7,600. And from that point forward, the NASDAQ has gone from a measly 7,800, measly 7,800 to over 14,000. Yep, that was a very deadly cross we had there, kids. All right, so let's go back in time. Let's find the next death cross. The next death cross was right here. Okay, so this one happened on the bounce in November 2018. Right there, that happened when the NASDAQ was about 7,300. And from there, it's true. I'll give you this one. From there, we sold off from 7,300 to 6,300. It took about 2 weeks, and then about 4 weeks later, we had recovered. So that wasn't really that scary. Yep. All right, that's kind of scary. That's kind of scary. You see that? All right, so then that was the second most recent one. Let's go back further in time. Jump in our little time machine, and oh, looky here, we got a whole bunch of them, folks. Okay, so let's see. We had a death cross in May of 2016. That did nothing. That went nowhere. We had another death cross that happened right here, and I just want to draw your attention to the fact that it happened at 44.40-ish, and the final was about 42.40. So if you had shorted right here, and if you had gotten out and covered right here, you could have made 200 points. Woohoo! Big bear market. The previous death cross was right there. So you got 3 of them right there on the chart, all within like a year. So you had 3 death crosses within a year and no one died. That is a scary death cross, I'm telling you. All right, we're back in our time machine. We're going back and where's the last? Oh, there it is. There we go. 2011. All right, back in 2011, folks, we had a death cross that occurred right here. Market at that time was sitting down here at the very bottom at 2,400. From there, we rallied before we sold off back to 2,400, and then we rallied. Very deadly cross, kids. Very deadly. Go back in time a little bit. Oh, look here, folks. We have another death cross. Yeah, that one did nothing. Okay. All right. This death cross is like about to kill me. I'm like, I think I've died a few times. Oh, there's a good one right there. All right, it is true, folks. It is true. In January of 2008, January 2008, the NASDAQ gave us a death cross. And while it did happen at the bottom of that cycle, so at that point it happened when the NASDAQ was about 2260-ish. And from there, we rallied, but we did continue a bear trend. So let me zoom out so you can see this whole thing. I want to give the death cross all of its murderous credit that it deserves. All right, because we had a death cross here in 2008, and eventually we did have a big bear market. So yes, the death cross was deadly. All right, I'm being a little bit dramatic, folks, but I'm not really. If we go back even further, you can just see on here, there's 2 more. There was one here where nothing happened. And the reason is because this is one of the worst indicators in the stock market. This is awful. This is awful. Okay, let's just count them up. 1, 2, going back to 2008. 1, 2, 3, 4, 5, 6. That was kind of double thing there. 7, 8, 9, 10, and now we're working on our 11th. So since 2008, we've had 11 death crosses. We've had 1 actual bear trend. That was 2008. And we had 1 opportunity in 2019 where you could have made a little bit of profit. Not much, but a little bit. Scary stuff. Why am I making so much drama out of this? Because this is one of the worst indicators in the market. You hear about it all over the news. They're out there spreading it all over social media. People are freaking out. I see people who are like, the death cross just happened, everybody. We got to like go to silver, go to gold, go to gold. Economy's crashing. And you know what? It might be. The truth is I'm actually very bearish on the economy right now, but not because of the death cross. I'm very bearish for other reasons. I put it out in my market update a week ago. You can go back and watch that. Other indications that we have that the market's very bearish right now. But it's not a death cross. And I don't want, I never want any of my students to ever go out there and be the crazy people who are saying, the death cross is happening, run for the hills. Because it's not. In fact, more often than not, when the death cross happens, nothing happens. The market actually rallies from there. So here's the crazy thing. Every once in a while, 2008 happens. You have a death cross, and then the market collapses. And then somebody's like, hey, every time the 50 period crosses the 200 period, the market crashes. There must be a death cross. This is really bad. No. In fact, would you like to know the real death cross? Would you like to know that? I'll give it to you right now, okay? So we're going to come back to our chart. And the reality is if I change these indicators just a little bit, I can take the same 2 indicators. It's just a moving average. I can still take that same moving average, but instead of being a 50 and a 200, I'm just going to change the inputs from 50 to 10. And then from 200, I'm going to change it from 200 to 50. Now watch what happens, folks. This is going to be crazy. You ready? I just gave it to you. Look here. Would you believe me if I told you that I told my students on my Sunday night profit picks to go bearish around 15,000 on the NASDAQ? How would I have possibly known to tell people start shorting NASDAQ at 15,000? How did I know? Because looky right here. Oh, there is a death cross. But that's not the 50 over the 200. That's the 10 that just dropped below the 50. Much more deadly. Go back in time, folks. You can put these on your own charts. There's a few other tools that I use to confirm these. You're going to see a few false signals. But the big signals back in 2020, how did we know that the market was crashing in 2020? Because the 10 period had already crossed the 20 period, or 50 period, excuse me, had already crossed the 50 period. And it told us that the market was going down about a week before the coronavirus went public and people started freaking out and selling everything. That's right. We got in early. We got in to the bearish trades early, got out of the bullish trades even earlier. So we didn't get hurt. And it works the other way too. You could call this the angel cross instead of the death cross, the angel cross. Look, when it crosses the other way, look here, I'm just going to circle some of these. This one, this one, this one, this one. Buy, 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 buy. These are great buy opportunities, folks. That's how we made 200% real money profits on our trading account in 2020 because we had so many buy signals that said buy, 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 buy. So we bought, 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 bought. And right now we're getting a lot of sell signals. So no, we should not be buying right now. We should probably be selling. But I don't want to ever hear any of y'all talking about the death cross as though it's the thing that's going to like string us up by the toenails and kill the market. It's not. In fact, statistically, it's probably going to do the exact opposite. All right, so there it is. Talked about the death cross. I've debunked it, and I showed you the real death cross, the 10 period over the 50 period. If you find this helpful and you want some more of these tips, well, number one, you can join me for my Sunday evening profit picks over at Trade Maestro. And if you don't want to do that, just at least subscribe to my YouTube channel because here you can get all this kind of stuff. And I got other videos that are coming out that you're going to want to watch. So yeah, subscribe yourself to this YouTube channel if you're watching it on YouTube. If you're watching it on my blog, subscribe to my email list because that's the smart thing to do. Or if you're on Facebook or one of the other social outlets, just subscribe or like or whatever it is for that platform that you're watching this on. But I hope it's been helpful for you. Thanks for watching. And until next time, happy trading. We'll talk to you soon.